Hey traders, checking in on the stock market today. So bulls ended up playing defense to start the morning, and in response to key supports holding, we get significant follow through on a bounce, but a bit more is needed to prevent daily bear flags from shaping up. I'll show you what I mean. All right, so we're going to check in on the charts, and at the end of the day, I'm going to go over a bit of trade review because I made money trading today, but it still is a loss in my book, and I'll show you why. And there were a bunch of lessons that I learned and have to continue learning to continue to improve. So looking at the S&P 500 futures chart, the bulls confirmed a 4-hour trend change this morning. I exited a good bit, the majority of my short hedge position, which I've been swinging all last week, SPXS. Reason is, bulls started to prove things to me. So that 4-hour trend change was notable, but even more than that, it was holding of support. All of our major sectors tested, well, not all of them, but QQQ and IWM tested the lows of Friday first thing. We held it and then saw a significant bounce through the morning from there. So that's enough for me to take off that position. And I've exited a good bit of everything. Crypto, stocks, everything. I am back in cash mode for December as we head into the end of the year. And honestly, it feels great. As a day trader, I love not having to worry about anything unless I'm doing something. Because other times when I have open long positions and I'm trying to hedge it and doing this, there's a lot going on. My account's moving around and I'm not even doing anything, and I don't like that. So I am back into cash into the end of the year, and we'll see what 2022 brings, but definitely in day trade only mode, not strictly, but vast majority. So with that, we had the 12-hour lower highs that we were keeping an eye on the futures chart. That broke as well. No follow through at this point. So I'm looking at SPY, and the daily bounce is trying to take shape. Tomorrow's a pretty important day. If we see a red day tomorrow, there's a lot of our sector ETFs that are potential daily bear flags with a red day tomorrow. If we have a green day tomorrow, we start creating space for a potential daily higher low to form once we top out on this bounce. So tomorrow is important for me. And again, look at all our major sectors. Potential bear flag on SPY if red tomorrow. And XLF, if it were red tomorrow, it'd be a potential bear flag on the daily. IWM, if we're red tomorrow, it's a potential bear flag on the daily. So tomorrow's a pretty key day. And bulls obviously want to follow through with an hourly uptrend. SPY hasn't confirmed an hourly uptrend during regular trading hours. That's important for me. It definitely, I acted on the futures chart and what it did. But if we're going to get follow through or any kind of confidence, we have to see trends and follow through during regular trading hours when there is real volume at play. So the best case for the SPY bulls tomorrow is set an hourly higher low, holding the low of today, and break the high of today to confirm that hourly trend change. And then on the daily, the next most important resistance for me is 464.67. I would call anything under that a lower high. Tomorrow's important. QQQ, daily inside bar. QQQ today was key. It was all bears the first 10 minutes, and things got extreme. If you were watching semiconductors and EV, and again, the way that the last few weeks have played out is we had significant weakness in IWM. Growth names were the first to sell off. XLF was weak, and that started fear in the broader market. And then the next chapter was QQQ followed suit. And our lead bulls that held on well during these sectors showing weakness, they acted as laggard bears. EV names and semiconductors and QQQ over the last 4 days followed to the downside fairly rapidly. The first 10 minutes of trading today, if you look at Tesla all-out flush, in 10 minutes we dropped 5%. NVDA, in the first 10 minutes, we dropped 6%. That is massive. The speed and the rate at which those drops were taking place, when you see that kind of fear, it doesn't matter nearly as much what the support levels are on individual names. And this goes for sectors, this goes for crypto, for everything. When there's fear at play, the broader market dictates everything. So I made a play on NVDA playing this bounce, which we're going to go over at the end of the video, and it was entirely based on QQQ testing the low of Friday support. That's why I entered, because we had a support test on QQQ and things were massively extreme on that 10-minute drop. It had nothing. I didn't look at the NVDA chart. I had no idea where support was for NVDA because that didn't matter. When you see that kind of environment take place, the broader market or the ETF that's related to the individual name is going to dictate the bounce. And just like cryptocurrency, there are times where Bitcoin is dumping and I'm trading an altcoin because the bounce is likely to be stronger. I'm not even looking at the altcoins chart. I'm staring at Bitcoin, and I press buy on the altcoin Ethereum when Bitcoin finds a temporary bottom. So again, fear and correlations picking up on fear, individual levels not completely ignored. They still have an impact, but in large degree, they go out the window for me, and it's all based on the ETFs and the broader market, as opposed to the individual names levels. And that is an important lesson because I've been doing that for years and years, and it has suited me well. So QQQ, inside bar on the daily. And again, the weakness picking up for our laggard bears is really the last 4 days, because before that, they were just fine, still in the daily uptrend. And as soon as QQQ lost the daily uptrend, that's when EV and semiconductors started showing notable weakness the last 4 trading days. So I'm watching closely to see, can QQQ set a weekly higher low and help alleviate fear? The fear, we have fear lows now on all of our major sectors with lows of last week. Fresh fear is a term that I've started using, I think the last 2 days. And fresh fear means hitting new lows. If you're not seeing fresh fear, fear starts to alleviate a little bit. We start to change trends on short-term timeframes to bulls. Every time you hit fresh fear, it just revitalizes that fear. So those lows from last week are very key to be watching. QQQ bulls need an hourly trend change in their favor. Again, pretty much a double bottom with the low of Friday. Nice bounce all day. Hourly consolidation started into the close. So tomorrow, the bulls must confirm an hourly trend change in their favor, break the daily inside bar bullish, and then we look to 392.34 as a little resistance level. But the bulls need a big enough bounce to create the space for a daily trend change to attempt and eventually take place. So QQQ has more work to do as far as how close are we to fresh fear lows. 1.9%. Where's SPY at? A little bit more, not a huge amount. 2.3. IWM. 2.9. So QQQ is the closest major sector to fresh fear lows. So keeping a close eye on it. And again, QQQ, semiconductors, EV over here. XLF, IWM, correlated names to XLF, generally reopening names. Energy sector, they're all over here. That distinguishing separation between these two groupings since the COVID lows has saved me a world of confusion. SMH. So again, significant drop today, but it's a confirmed daily downtrend. And so far, that's a bullish candle, so that we can call it a lack of follow through at the moment. If we alleviate fear and put a bottom in on the market, semiconductors are positioned the best out of any sector I'm looking at as far as their weekly charts. We haven't even touched weekly EMA 12. It's a potential weekly bull flag at this point. But we need an hourly trend change to the bulls, just like everybody else that bounced today. Nice bounce. Tomorrow, prove it with a higher low and higher high. If you prove it, we zoom out and scout daily resistance of 309.44. But again, best case for the bulls is a green day tomorrow for us to call it a confirmed daily downtrend with no follow through, keeping a potential weekly bull flag in play. Tesla with that big flush today confirmed a weekly downtrend. If we keep holding weekly EMA 12, it's a weekly downtrend with no follow through, which means a potential monthly bull flag. I'm not holding my breath for a Tesla monthly bull flag, but just recognizing that it would be a possibility if this were our low. We haven't set an hourly trend change yet. So the bulls must do so tomorrow with a higher low and higher high. If we do, we zoom out, we scout a daily lower high with tons of space for it to form, anything under 1173. So again, the bulls have a lot of proving to do. If we're going to call it a monthly bull flag, we essentially need a daily trend change to shape up back to the bulls. And the only way that's going to happen is if our fear low is in, and if we set weekly higher lows in QQQ and SPY and head back up to that all-time high. But bears will be waiting for a Tesla daily lower high because of how much space there is for it to form. Hourly trend change is needed. Bulls proved oversold bounces, and nice bounces, 7%. Great job. Now it's up to follow through. Need a green day tomorrow for an hourly trend change, and vice versa. Need an hourly trend change for a green day tomorrow. So XLF is a potential daily bear flag at this point. And again, bulls hoping for a green day to alleviate that concern. Resistance, anything under 39.36 is a daily lower high. If we have a green day tomorrow, we get a bit of follow through, creating space for an eventual daily trend change attempt. If we are red tomorrow, daily lower high is set, and we're looking back down at the low of 37.54 as a must-hold level to try and shape up the trend change back to the bulls. So the daily downtrend is still our guide on most names. IWM, bounce attempt, broke the high of Friday, no follow through. It's a bear flag at this point. If we get a green day, we're looking at 224.21, key resistance. But if we have a red day, this bounce is weak and it cooled off daily RSI levels from historical bounce levels, but we can definitely see another leg down. So aggressive bears are scouting daily lower highs, and the most aggressive bears are going to top fish highs of today, tomorrow, if we open lower. MSOS had an absolute sell-off into the end of the day, and this has inside info written all over it. This is one of the most brutal drops I've seen. It's been a very bearish sector, but that kind of volume to drop 9% in 90 minutes of trading is massive, and we're looking for news on whether SAFE Act is going to be included in the NDAA or in the House version or blah, blah, blah. And definitely somebody knows something for that kind of volume to be racing for the exit and smashing the bid. We'll see what it ends up being, but MSOS down to fresh lows. Again, the weakest sector staying lead bears. Pretty much the opposite of the semiconductors as our strongest sector still holding strong. So again, just wanted to touch on that. I have no interest in the sector until there is a catalyst or bull momentum at this point, but definitely a very notable end of the day with that collapse. The dollar is a potential weekly bull flag. If this weekly bull flag confirms, it's bearish for commodities, and it may be bearish for broader markets as well. The broader markets have been consolidating for a couple of weeks. Let's see, how many weeks? 2? It's got to be more than 2. It might be only 2. It's a long 2 weeks. So it hasn't had a direct impact. Dollar's been going up for a while now. But the commodity space has been weakening for the last month. And I'm talking gold, silver, oil, natural gas, uranium, which was a lead bull, started showing weakness over the past few weeks. Copper is potentially close to rolling over. Platinum showing weakness. So definitely keeping a close eye on the dollar in that regard. But weekly uptrend is going to be the time frame that I'm watching it on, along with the 6-month equilibrium, scouting a lower high compared to 103, but that may take months and months before that forms. Gold, bounce underway. I entered GDX, and this is going to be part of my end of the day trade review, but I entered bullish in GDX for this 4-hour falling wedge on Friday, and it broke bull, and we're still in a 4-hour uptrend, but it's a weak daily bounce at this point, and it's a potential daily bear flag. So I am no longer in GDX, and I'll show you why in a minute. But keeping an eye on gold, again, just real cautious. And TheChartGuys Jungle Funk pointed out 12-month time frame for gold. Compare this to Bitcoin's monthly chart. And again, not suggesting correlation, but just suggesting psychology and similarities. Massive breakout to all-time highs, 3-candle pullback to a higher low, new all-time high with a lack of follow-through. And what did Bitcoin do on the monthly? The exact same thing, but further downside. Massive breakout to all-time highs, 3-candle pullback, set the higher low, new all-time high, lack of follow-through, pull back to EMA 12. Does gold even have an EMA 12? It does. Are we going to see further downside? I am not confident in the metals at this point in time. We have a very clear support level on gold, double bottom at 1676. And if we break 1758, the low of last month, it is a low, high, double bottom, lower high, and we're heading back down towards that double bottom. Definitely a bit cautious in these metals. Bulls are still barely holding on. Silver is weaker than gold. Silver is in a monthly, weekly, and daily downtrend, which is certainly very bearish. Miners, daily bounce underway. Just scouting a daily lower high, but a nice little close to a double bottom Thursday and Friday, setting up this move. So I headed into this morning saying I am focused on my GDX swing. And what I did on Friday was I entered a little bit too early. It was a bottom fish that I was looking for, but I entered 30.40, which was a bit above the low of the previous day, 30.09. And I ended up doing a little bit of day trading to get my break even down, because once we did hold 30 and form that double bottom, I flipped it for 10 cents a couple times got my average down to 30.25, sold a little bit of my day trade position to get it down to swing trade size. I swing trade smaller positions, then I day trade. Had my break even at about 30.15. Okay, I'm comfortable. That's right near the low. Let's see if the bulls can get bounce follow through today. We start today. I say I'm watching high of yesterday first thing. We break it first thing over 30.73, but we don't get a whole lot of follow through. We get only 9 cents, and we drop down and hit the low of the day. At that point in time, I'm staring at gold and GDX, and I'm watching and say, okay, am I going to hold this position or am I going to exit due to a lack of follow through? And then I notice, after the first 5 minutes, things are getting massively overextended to the downside. I love playing oversold bounces. I'm going to play a bounce on either Tesla or NVDA, which is collapsing as QQQ is testing low of Friday. I personally struggle to have multiple open positions at the same time. I want to be laser focused on one thing, make the trade, ideally lock in the profit, move on to the next trade. That is where I thrive. That's where I'm my best as a trader, when I have that laser focus. The more positions I have open, the more scatterbrained I am. And again, this is just an observation that I've made over the years, and today was a perfect example of it. So what I did was say, okay, well, I don't want to stare at gold anymore because it's not nearly the opportunity that these other names are giving me. So I'm just going to place a stop loss at that point in time, low of the day, 30.56. I'll put my stop under 30.50, under that psychological level, giving a little bit of wiggle room. And if we lack follow through and break to a new low of the day, then I'm not going to be confident in the bounce follow through. And of course, you can see I pretty much stopped out at the low of the day before we got that follow through. So that was the start of the trade. Then NVDA. So I'm in NVDA. I make my first entry on this extreme drop I'm watching the 2-minute time frame, and I was actually watching the 1-minute waterfall drop where it was a lower high every single candle. And that bull signal would have been 283.46. I didn't enter on that signal. I made my first entry right before then. So first entry, 283s. And I said if 280 breaks, I'll make a second entry and then place a stop loss based on dollar risk that I'm willing to take. The reason I entered at that point in time, number one, I know it's way extreme on tons of time frames, and I see QQQ is heading to low of Friday. So I position myself, if low of Friday holds on QQQ, I'm going to be positioned well for a bounce. So I didn't fill a second position, just one. Bounce starts. I exit half position fairly quickly, too quickly, but again, to be put in the driver's seat, I exit in the 284s, so my break even is now right around 282. And now I'm very comfortable because I will happily add lower. The bounce gets follow through. I exit the second position, 287s for a more than a day maker. So at that point in time, it was about a day and a half maker. There's background clicking because Sweetie Pants is chewing on something. So at that point in time, I've locked in a day and a half maker. I look over at gold and say, oh, I stopped out at the low of the day on GDX. This swing trade's going to get follow through. That's another day and a half maker that I just left on the table. Again, my mistake, I left money on the table. I locked in profit on my GDX swing trade, but I left money on the table. So the things I did well, my mistakes leaving money on the table is always what I want to be doing. I don't want my mistakes to be giving back profit. And that's my conservative mindset. Be conservative. If I make a mistake, it's money on the table. Okay, I did that well. I played the initial NVDA bounce well. Those are the two things I did well on the morning. Utilized QQQ levels for the NVDA bounce. We'll throw in 3 things to make me feel better. Things I did poorly. Too scatterbrained, unable to focus on multiple tickers at the same time. Things are moving very rapidly, so I'm okay with that. That's my excuse. But at that point in time, I then felt a little bit of FOMO on the miners, but I knew, okay, I'm feeling FOMO. I'm not trading it again, but I'm frustration. I felt frustrated. I stopped out at the low of the day right before the move I was looking for took place. And I stopped out at the low of the day because I had to take my eye off things. I had to put an arbitrary stop level that didn't really mean a whole lot as far as an important level or anything. So I was frustrated, and that made me miss more opportunity because at that point, I don't feel like trading anymore, right? I'm not going to trade when I'm frustrated. I'm not going to revenge trade. I had a day and a half maker, but this double bottom here, I mean, if I'm in the zone, I am right back in my position on that double bottom and right back out another half position on that bounce and then stop under the low of the day, let the hourly bounce play out. And certainly would not have, I'm not going to kid myself and think that I would have held for the entire time, but I definitely left a solid with the miners. I left a day maker on the table, and with the failed re-entry of this double bottom, I trade the first bounce well, but by not acting on the double bottom, I definitely left a 3-day maker on the table for a second NVDA trade. So that's winning on the day and making all kinds of mistakes and not feeling good about the day. And that's just the way that it goes. So, it's not something I'm going to try and work on as far as multiple positions. I know who I am as a trader, and I trade one thing at a time, at most 2 things. That's why I don't like having a lot of open swing trade positions. I've been experimenting over the last 2 months a lot more with more open swing positions than I've had in a long time. And I closed a ton of them out over the last 2 days, and I feel great. It's like a big weight off my back. I know I'm going to have to get better and more comfortable at swing trading in the future because I am not going to put in this much computer time for the rest of my life. I would die at 50. So I'm not doing that. But while I'm here, I'm going to stick with what works. So I'm not going to try and change that. I know laser focus is good for me, but I guess that's it. I'm done talking. So I hope you had a good day. Green day is real important for bulls tomorrow because if we have a red day in the broader market or our major sectors, that puts the possibility of fresh fear lows back on the table. Feel free to ask any questions. I hope you had a good day and do good things. Picking up on chapter 2 of the road trip adventure, last we left off was just starting off in Smoky Mountain National Park, North Carolina. Camped there for a few days, ended up going westward through Kentucky on my way towards Colorado out west, and encountered this nice box turtle guy, and he had some really cool patterns on his back. But what I loved about being able to travel on my own in terms of, choosing the days that I travel is picking when I go to places on weekdays because there's way less people out there on weekdays. And in Kentucky here, this was the first time I really got to be by myself because the national park in North Carolina still had a lot of people there. So after about a week on the road, this was my first time being completely alone. And the best part about traveling and road tripping is your agenda is literally, I want to see cool things and I want to get from point A to point B. So the only things you need to worry about are obviously for your safety, but what am I going to eat today? What do I have to carry with me? Where am I going to nap? And make sure you have your tent set up before dark. That's pretty much it. So you have tons of time to just explore and, oh, that looks cool over there. I'm going to go, check that spot out, or I'm going to climb those rocks, or it's just complete freedom, which is really empowering. But got to this spot and again, nobody else around. So just got naked. And the first time I could rinse off dirt and sweat from a week on the road. And what I love most about road tripping and why I think everybody should, practice or do it in some degree is how much we take things for granted as human beings. And I do it as well. Everybody does it. But the kind of things where a shower, if you're showering every day or every other day, it's just this routine. It's this habit and you got to do it. If you're showering once a week or once every 2 weeks, it's the greatest thing that's ever happened to you. And it's so enjoyable. And it just would blow my mind as I was sitting there that you turn a knob and hot water comes out of the wall. And thinking about 99.9% of every human that's ever lived did not have that capability. And the ones that did were reserved for royalty. And here we are, and any average Joe can have 2 places in their house where they turn something, or more than that if you include sinks. You turn a knob and hot water on demand. It's astounding. And even just things such as, a hot meal, or there's so many things where you're road tripping and you're roughing it and you're sleeping in a bed becomes the greatest thing ever. And it just makes you so much more appreciative of those things when you do have them after not having them for a while. So I ended up hanging out here, swimming in the creek, found a nice rock to nap on. And when I woke up, there were a bunch of buzzards circling above me and they thought I was a naked dead guy. Fortunately, that was not the case. So a bunch of lush nature in Kentucky as well. And these spots reminded me, I actually didn't put these up, I came across them, but they reminded me of Andy Goldsworthy. And if you're not familiar with Andy Goldsworthy, he's a really, really cool natural artist. He goes out in nature and he does these things. This is his documentary, Leaning into the Wind, but his rock structures, and he makes things out of twigs and leaves and icicles, and the way he manipulates the natural environment, knowing that it's only temporary, the vast majority of his art pieces, is just really cool. Look up Andy Goldsworthy and check out some of the stuff that he does. So that reminded me of a lot of his work in terms of stone stacking. Found a cool feather, was hanging out with Ringo on the trip, keeping me company. That was a spot where I camped got under that overhang, and any rainstorms that came through, I was completely protected and able to have a fire under there. And there were some cool waterfalls nearby as well. And I actually ended up getting a little bit lost in terms of not being able to find my destination of where I was going to camp here. But again, it's the kind of thing where there's nobody around and you just pick a clear spot and to say, well, I'm going to sleep here tonight and then we'll see what tomorrow brings. And what really was another big adjustment was time. So when you're in a routine and you go to work or, you have your routine in daily life, time flies by because it's the same monotonous stuff that you do consistently. And I'm in that space right now. And that's been some of the biggest shifts in my life in the last 5 years, going from every single day being something completely new and foreign and things you're not expecting to see. I know I'm going to Mammoth Cave National Park, but I have no idea what it looks like. I've never been there. And it's just all new and exciting and fresh. And time slows down so much where every single day is so distinctly different than the day before it and the day after it, as opposed to when you're in a routine like I am right now doing the chart guys stuff and doing stocks. I wake up, I have my routine, and that makes the days kind of blend together a little bit. So if you are trying to make things slow down and stop and smell the roses, the more new experiences and the more new stimuli that you can give your senses, the more that's going to happen. And time is very subjective in my opinion. They've done studies where you take old people and young people and they say, all right, time a minute in your head. And consistently for older people, they are early. And so that means time, the perception of time means it goes by faster. And the younger people are consistently later, meaning time is perceived slower. So I don't really understand what time is, but I do know that you can manipulate it in certain ways in terms of how it affects your life. So we'll head on to chapter 3, and that's going to continue heading westward through Kentucky to Mammoth Cave National Park, another cool spot. And we'll check in then. I hope you all continue to do good things out there. Have a great day, and we'll see you tomorrow.